Welcome back, everyone. We're going to go ahead and run a DCF analysis on Tesla stock and get an idea of what its intrinsic value may be. Now, I did run a DCF model on Tesla before. However, as I stated in the video, it was like basically the bull case DCF analysis, like that they're going to continue to grow revenues aggressively through the rest of this year. And then from there, I grew it at 40% revenue out for the rest of the years. And then on the latter 5 years, we went with 20% revenue growth rate. Overall, it was a pretty aggressive model, but that was kind of the point of that video, to do like an absolute bull case DCF analysis. And the value was around $1,000 a share. Now in this video, we're going to go ahead and try to value Tesla in a more appropriate manner. One that's not like a bull case. Okay, so we need a growth rate that we think is appropriate based on the way they've been growing. I think that a conservative number would be 30% over the next 5 years. However, we're running a 10-year model, so in the last 5 years of the model, I'm going to go with 15% revenue growth. We'll cut it in half. And then we need the free cash flow margin. Now, in this last quarter they had, it was about 12%. Which is really good. You can tell that their free cash flow margin is getting better and better, which means that their free cash flow that they're producing is getting better. However, for the sake of remaining conservative, over the next 5 years, we'll go with a flat 10% on free cash flow margin. And then because we're assuming that it can get even better in the last 5 years of the model, we'll go ahead and bump it up to 15%. One last note before we get to the model, I am going to grow these revenues out from the year 2022 based on an estimated 2022 revenue that I think they'll have. I don't think it's fair to grow 30% off of the year 2021 because they've just been exploding so much in the last couple quarters here. I think you need to base it off of recent performance and not all of 2021. So here we are in the model. I went ahead and grew a year 2022 to grow off of. I got $75 billion just based on their Q1 of 2022, which basically I multiplied it by 4, and it was roughly $75 billion, so that's what we went with. Grew that out by 30% through all the years to 2027. You get about $278.4 billion. Then from there, we switch over to a revenue growth rate of 15%. Remember, the rule of big numbers is applicable here, and you can't assume that they can grow at high rates forever. So we grow it out by 15% out to the year 2032, which gives us about $560 billion in revenue. We apply our free cash flow margin to all of the projected revenues for the first 5 years. We get our projected free cash flows. We have to do the same thing down here, but I made the free cash flow margin a little higher because you would expect with the company more matured that it should be a better margin. We apply that to the projected revenues for the last 5 years to get the projected free cash flows for the last 5 years. We also had to get a terminal value, which you can get by applying a weighted average cost of capital and a perpetual growth rate. That's based on the last projected year of free cash flow. Then we have to discount all those numbers back. I like using a 12% discount rate for my rate of return. Then you can add all of those values up. I just realized that in this empty space, I didn't put the terminal value after discounting it. Okay, just so that no one's in the dark about that, this empty space right here, that would be $478,179,659,903 to be exact. So we'd add all the values up, divide by the current shares outstanding, and you get an intrinsic value of 643.36, or roughly 643 a share. Okay, so we got a fair value of 643 a share. Now, last I checked, Tesla's actually trading around this share value. Last I looked, it was at 648 a share. So according to this model, Tesla is right about at fair value. Now again, this is based upon this model, which I thought I was being pretty fair with this model. Like, this is not a bull case for me like that last model I ran. So I mean, based upon the model, I do feel that Tesla probably is worth around 643 a share. Now, to my understanding, the only reason Tesla has even dropped to around this current share price that we're at is something to do with allegations against Elon Musk. I'm sure that will blow over. But I mean, look, regardless of that, and if Tesla even goes back up once that blows over, there's a very good chance Tesla goes way below even this fair value based upon this model. Again, you get a fair value based on the numbers you put in, your assumptions. So if you find my assumptions in this model to be well within reason and you like them, then Tesla may be pretty much in buying territory at fair value right now. But if you want to buy them under current value, yeah, you would have to wait for them to go a bit lower. Okay, folks, that's all I've got for you in this video. Thank you for watching, and I will see you in the next one.